The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We are calling you from the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. Starting the day with our DAX chart. You notice that we've completed the Gartley. We bounced up slightly, but the important thing is to realize that it's moving very, very slowly compared to the U.S. market. So we're seeing the Asian markets react a little better, and we believe that's because the EM, the emerging markets, the Hang Seng, and the Chinese markets bounced off major support that we featured on Monday, and also we featured it in the newsletter also. So I think we should, pay particularly close attention to that. Now, if we take a look here at the FTSE, you're going to notice here that it's acting a little bit weaker, and part of that probably is related to the political predicament in Parliament, and that is whether Theresa May is going to be able to get, this thing done so that Brexit will continue on. I have some pretty smart sources that say there's going to be another referendum, and Brexit will go by the wayside. But whether that'll happen or not, remains to be seen. So we'll go from here. We are having a continuation of the bottom that we thought was going to happen in the stock market over the weekend. That certainly happened. If we remind ourselves that we had a very nice three-drive to a bottom pattern in the NASDAQ, along with 4 of the 5 FANG stocks, Google being the only one that didn't make the three-drive pattern. It made the double bottom pattern, and we're continuing on, for some more rally. How much we're going to get, folks, I'm not sure, but the minimum would be 382, and that's quite a ways up. So we just want to hold our own here. And remember, we're in the holiday season, and usually that's a bullish season, but, we'll have to wait and see. Remember our good friend Stan Harley was very bullish coming into the week also for a lot of different reasons. And even Arch Crawford yesterday said that there was a positive bias in the market based on some of the advanced decline lines and things that he was looking at also. So we'll see what this crest might be when it finally does come. Now, we have had a yeah, if you don't like to vote, just change it. That's absolutely right, Terry. Yeah, things are not like the way they used to be anyway. We had a real interesting email today from our good friend David White here at TFNN showing the chart of oh dear, hold on one second. It was the same chart. Let's just do that right now, just to show you the same chart. Here, he asked me a chart about a copper mine, and what I did was I saw the chart on my desktop, but I didn't look at the notation on the bottom to see that it was the one you asked me about, David. So I've got that one done. If you'll bear with me here just a second, I'll bring it up so that we can see it. At least I hope we can. Is that right? No, by golly, where is it? Did it disappear on me? Oh, here it is. We got it. There we go. Here's the same pattern. One is copper, the other is corn. Copper mining, the other is corn. Here's the copper mining. You'll notice that what's interesting about this, if you really want to study the Gartley a little better, you'll check out the relationship in the AB leg versus the CD leg. That's the main thing that you want to look at here. From your A leg down to your B leg, you realize was 8 trading days, and from C leg down to your D leg was 8 trading days. So you have a very low risk in this trade, and it is in a marginal uptrend. So that's one of the ones that you might want to keep an eye out. And at the same time I was doing that, I said, well, we might as well check out the metal behind the we'll see the simmer. Yes, actually the risk is about the same, David. Doesn't make lower risk, but what it does do, it defines that. It actually does do. It does refine lower risk, because if it goes below there, there's something absolutely wrong. We have A, B, C, D perfect in time and price. You should have the littlest amount of risk that you can possibly get, because symmetry does add to that. Now, if we look at the copper, the metal, you'll notice here in November we had that big run up. It ran from 265 up to 282. Then we came right back down, almost made a double bottom at 267. Then went up and made a new ABCD at 285, and then came down, and then we formed that 135 pattern. So this is in an uptrend since the 30th of November, and so your risk there is just under that 5-point, which would be around 272. And the price swing on this, you would measure the ABCD of the new swing, which if you went up 20 points on your A leg, you go 20 points on your CD leg, and that will take you up to 290. And if you look at 290 up at the top of the page, that's the 1.27 expansion of that swing. So that's another idea of symmetry coming in at the same time. It doesn't always come in that clearly, but when it does, that's what you want to take advantage of. So keep in mind that this is what we're looking at. Folks, there's one market that's here that is acting extremely bearish, and I should bring it to your attention because it has the possibility of doing what crude oil did. And that market is the market that I love the most, and that is the gold market. The gold market is just not acting very, very bullish. We had a 61% retracement yesterday, and it immediately broke $12. This is not a good sign, folks. So when you're seeing these things happen, you have to pay very, very close attention to them, because it can mean that this thing could be getting ready to go lower. Remember that high that we made at 1246 was a 382 on the weekly basis, and with silver acting as badly as it is, it's telling us that we have something that is probably not acting very good at all. So that's what we're watching this morning anyway. We'll see if in fact it will do that. Now, I wanted to share with you one other thing about the psychologies of the market here a little bit. You remember on Sunday night I told you about the phone call I got from Saskatchewan about how he was going to lose all his money and he's short natural gas because he was short Friday on the 23rd up there at that 450 level, and it closed at 430. So he had a 20-handle lead coming into it, and yet the news was a warning about global warming coming in, and also the coldest weather in 140 years hitting the Northeast, one of the most popular parts of our United States. And look what happened. The market gapped down. Instead of having a $5,000 loser, he has a $5,000 winner, and so he's donated some socks to the gospel mission. Now look where we are last night. After that, we rallied up. We came down to a 61% retracement yesterday, right at the 410 level, and from 410 we rallied another $3,700 up to the 70, just a little above the 78% level of that move, and almost 50% of the high that we made back on Tuesdays. This is a very tradable market, folks. You got to give it about a $500 stop, but it rocks and rolls. This is the pork belly of the energy complex. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I mentioned the comment about the the natural gas being the pork belly of the energy complex, and gosh, a real flash of the old floor stuff brings to my mind something that happened that I think you'll enjoy. It was one of my most memorable things that happened to me during my 3 years down at the Merc, and it was a cattle. The cattle was having a big report. It was the yearly cattle inventory report that comes out in January, and I was short pork bellies. And I was short. I think I was short 3 bellies is what it was. It's not a big position, but cattle were called up the limit 2, possibly 3 days in a row. And they'd been in a roaring bull market. I mean, they'd really been going. And I gave my order to Jan Sklar. Her father, Jerry Sklar, was a major filler over in the cattle pits, but my order was in bellies, and so she was holding the deck for Moy Zeidman, and I gave her the order, and I said, see if you can get it on top of the deck to see if I can get out of these limit up, you know, on the first day. And she says, well, I'll do what I can. And about 5 minutes, right after I gave her that, I said, oh my God, I've made a really bad mistake here. I was saying to myself, I was kicking myself. 5 minutes later, Jan comes up to me and she says, Maury wants to see you. This was about 5 minutes before the bellies open. And I walked over, and I was really scared because he was on all the committees. I knew I was going to get fined. I was questioning how much it was going to be. I was hoping to be less than $500. And he was standing on the step, and he was a little guy. He was only about 5'3". He said, I understand you have a problem. And I said, yes, sir. I said, a really bad mistake. I should have never asked Jan to do that. He said, I understand you have a problem. He said, yes, sir. I said, I'm short bellies, and cattle are going to be up the limit. He said, you realize that cattle and pork bellies are different things, don't you, young man? And I said, yes, sir. He said, and he opened up his deck. The only time I ever saw a deck in 3 years of my being on the floor. He had the deck in his hand, in his little tiny hands, and there must have been hundreds of orders there, and he opened it up, and the very first order was sell 2,000 Feb bellies at the market. And I looked, I said, is that a legitimate order? He said, do you think I'd have it here if it was something funny? He said, now go back to those currency pits and trade with the rest of the animals. Cattle opened slightly higher, were limit down by the time pork bellies opened and bellies went limit down. Yeah, Mortimer, yeah. No, it was Maury, not Mortimer. Anyway, they went limit down a couple days, so that was another situation where, you know, the cattle's going one way and pork bellies going the other, but that's neither here nor there. Let's take a quick look here at the cat. Can you hold on one second, folks? I've got to check something out here because the beeper's going off, and I want to make sure that the beeper is telling me what I need to know. And that is pretty much what I'm looking at. So let's take a look here at this gold market. What I'd like for you to see here, folks, is the bottom that we made way back at 1165. That was that 61% retracement. You notice how we crested early in the cycle and then came down into the 61% retracement at 1183. And then you notice how we crested on the right side of the cycle on the second unit, and then we came down into the 61% and 78% level at 1195. And then look what happened. You went right up into the same type of format that we did in September, and now you're starting to come down. This really wide range bar that we had yesterday is very important. I believe if we get below the 1209 level in Christmas gold, we're going to be heading down towards that 1180, 1175 level. And if we get below that, boy, you're looking at something really, really sinister. That's why I'm watching this gold so closely. And silver looks like something that is stuck on the bottom of your shoe after walking through a cattle farm. So be really careful of these precious metals on the bullish side. That's my 2 cents worth. It's my opinion. Whether it means much or not, I don't know, but that's what I'm seeing, and it's certainly acting like it doesn't want to do very much. So let's keep it on. We'll just watch it as we go through looking at some of these other markets here. Now we've had some comment about the dollar index. The dollar index is still acting very nicely. If you remember that euro that we were watching yesterday, we were watching that at that 11300 level. I already put the charts up, Jimbo. I don't know why you don't see the gold chart. It should be up there. Ha! What are you not seeing the charts? I'm putting them up. I don't understand. Let's see if this. Do you see the euro chart come up? What? Did the gold chart come up? I posted it in the room. I heard it click. Okay, good. We're all right. Let's go on. All right, there's the euro. We were looking at that euro yesterday at that 113 level. We got down to 112.65, which was within 5 pips of where the original stop was. Then it went right back to that 113 level. And then it's moving back down again. There's no gold chart. Well, we need to get that gold chart up there because I think that's a pretty important one. Let's get it here if we can find it again. Should be no problem. There it is. Let's get it up. And because this is well, I think it's important. I guess that's the main. There's the gold chart. What the important part here is, you see that where it says above 1233, this could go higher. It stopped right at that 78% level. That was also a 135 pattern. We're trading around 1213 right now. That 1210 is the 61% retracement. If we hold there and start to go up, then yes, this still has a possibility. But the way silver and platinum are acting is just horrible. Actually, platinum is acting so poorly. I don't have a chance to post this right now, but I will at the break. Platinum is closer to the lows than anything else. I mean, it's almost taken out those lows, equivalent to 1183. So this is not a good sign, you know, in the platinum. And of course, silver looks very, 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 very bearish. That's the main thing. Now, I wanted to give a salute to somebody, and that is, I don't follow stocks. Well, that's the understatement at all, but I do follow them somewhat because of the news. But if you'll remember here, back in October, right around that 57 level, right before the big move down, the David Ackman came out and bought $1 billion worth of Starbucks. That was right at about $57 a share. And if you notice that little red box that I put on this share here, that was the down move in October, folks. It was 4 days down. That's all Starbucks did, and that wasn't even close to a 382. And look where it is now. It's up to around 69. You know, and in fact, it's backed off from that level. But there's a perfect example of somebody that really made a commitment, and you know, it paid the paid the bills for a couple of years. He's had a bad run, but boy, that's a big move in a bear market. That means if this market would ever turn up, you know, you would be looking at something that would be very, very positive. One thing I did want to bring to your attention is that copper chart that we showed you from David White. That which really is it. Oh dear, what did I do wrong here? Click the wrong button again. Just give me a second here, folks. Give me a second here. Hold on here. I wanted to show you because this is the chart that David produces for TFNN each day, and it spotted this CPOX, this copper mining, for one of the best buys today using the Gartley pattern, and that's a very low risk trade. And with copper acting nicely, that would be a very low risk component. So we'll watch. I'm going to be posting the platinum chart when we come back from the break, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart of platinum, and the reason why I tried to show you what I'm looking at. Hold on here a second. My old limit minders are going off here. In the grains are actually acting pretty good. We'll cover March corn here in a little bit, but let's look at this platinum. And the reason why I'm looking at it from a cyclical basis, just going back and looking at nominal cycles that only work about 2 or 3 times and then they expand and contract, but we're in the second part of this. You'll notice the 2 cycles that are there fit very nicely, and the problem was that the platinum could only rally up to a very, very shallow 382 rally and then has rolled over. That's a sign of more bearishness, coming into it. So I would be very, very skeptical here if in fact that you have a bull market here in platinum forming, but there's always that possibility. But with gold and silver as weak as they are, I don't believe that is going to happen. Now, the next one that we want to cover is the corn, and I do want to cover the March corn because we have been watching this very, very closely, and we finally got our fill the other day, yesterday, as a matter of fact. The corn went down to our buy price, which was at 368. It got as low as 367 1/4. It's now trading a little above the 370 level. So what we do is we change our stop from risking $400 to risking a whole lot less on this right now. So but this is very similar to that copper chart that David White posted, that CPOX, and it is they're exactly the same. I mean, they're doing except the copper is at the 78.6 and corn's at the 618, but the ABCD pattern is there, and this is also a head and shoulders pattern in the March corn. If you look at it really closely, with your left shoulder being there in July, your head coming in on September the 17th, and your right shoulder coming in right now. And if you look at the time frame between the two, bada bing, bada boom, like Twentyman says, defy human nature, do the work yourself. You're spot on. So that's a perfect description of a head and shoulders pattern on a technical basis. So whether it's going to continue that way or not, we'll just have to wait and see. But that's what we're looking at here this morning in the corn market. We have a pretty good chance, of it holding. We've had a question about Apple. I'll bring this up to show you. Apple was a tiny bit weaker yesterday. I believe it made a little bit lower low, maybe not than the previous day, but we've been in the same area here for 3 days. That's basically a 3-drive pattern coming straight down. It's also nearly spot on to the 78% level, and that's one of the reasons why we thought we were going to get a pretty good rally here in some of these things, because of the fact that all of these patterns that we had in the fangs, that was Facebook, Apple, Amazon, Netflix, and Google, they were all acting technically about as perfect as you could possibly get, which is very unusual because usually they split around quite a bit. I noticed that David is posting a situation in Tiffany where it's down almost 10% today. I guess the little blue bags didn't sell nearly as well, at least so far. I don't know what the news is. It was probably some types of earnings that could be happening, but we'll have to wait and see. Let's get back to this corn market for just a little bit. We have something really big getting ready to happen, folks. Today we have no aspects that we talked about. Remember, that should be pretty close to some pretty good trend change. But on I believe it's the 29th or 30th, the president of China and the president of the United States, well, it should be the premier of China and the president of the United States, or vice versa. It will be talking about these possible trade setups, and we'll be able to see, what is going on. So Gator is asking me, did I ever trade cattle with Hillary? Well, actually, I did not, but I knew the broker that did the option trading for them. He was a broker for Revco out of Arkansas. His name was Redbone, and Redbone was a spy fisherman, and let's call it a fly fisherman. He was a fly fisherman, and he did all the trading for her. And then one day he was fly fishing, and he drowned in 1 foot of water. They found him face down. He had drowned in the water, fly fishing out there in one of the streams there where they have the trout in Arkansas. Very mysteriously, no heart attack or anything. He just literally passed away. Really nice, good old country boy. I met him one time at a cattle meeting with my good friend Jay Cross. But it was really interesting. Anyway, let's move on to one of the other questions that someone's asking us about, and that is the silver chart that I posted, excuse me, the crude oil chart that I posted from Mr. Z on Monday. I wanted to bring this to your attention because it is the Brent contract, and it, as you can notice here, that it was right at the 61% retracement from the April lows, which was also a 50% retracement from the January lows. This has come down, and it's actually held now. We've been here actually 3 days now above that 61% retracement. All the other times that this has happened, it's cascaded through there. So this is an important time in the market for the crude oil, because if it can hold this level, it's got a chance to have some type of a rally, but it will definitely be qualified probably as a DCB, and we all know what that means. So it is going to be very interesting to watch the rally unfold in the crude oil, also in the heating oil, because we have this tremendous cold weather coming into the northeast, and this stuff isn't moving very much. That's another sort of a bad sign. Remember, if markets don't go up on good news, they only have one way to go, and that is to the downside. So we need to pay, relatively close attention to that. Someone emailed me and asked me about my routine in the morning. I'm usually up by 4 in the morning Arizona time, 6 in the morning New York time. I'm checking what happened in the Asian markets and what happened in the European markets. Usually once during the night, probably around 2 o'clock in the morning, God taps me on the shoulder and it tells me to come in and look at the charts. And I usually do. That takes probably maybe 5 to 10 minutes unless something is really exciting happening. And then I've already prepared the afternoon before, when I do my videos and stuff for the next day. I prepare what I think is going to happen for the next day. And all I'm doing is I'm looking what happened the previous 2 days, and I'm moving him forward to see if the trend is going to continue. And I watch whether they're Fibonacci expansions or Fibonacci retracements. That's what I'm looking for. And then I continue that on till about 10 o'clock in the morning, Arizona time. And by then, I'm pretty much done for the day. And then I do a few other things, and I check a few emails and, do a few other little odds and ends. Back in the old days when I was writing books, that's how I would write books. I would prepare these things, and then after the markets got moving, I never watched the markets very much because it's quite boring after a while, but it would give me a chance to, write some things, and that's how I wrote books. But I don't do too much in the book department anymore because it's very difficult to sell any of them, because as soon as you write a book, it's on the internet for free, so that makes it kind of tough. So we're going to take a break here after we get back from this, and someone's asked me to discuss a little bit about Fibonacci numbers, which I will be happy to do, but I think we have to pay a few bills here. It looks like the old clock on the wall is telling us it's time for the commercial to come in, but I do not hear the music. Al, but there we are, Al. God bless you, my son. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I posted the pictures of this, the patterns that I use. This is actually a marble clock that's here in my office. It was sculptured by one of my students, Al Coppola, and it is really a beautiful piece of artwork that I really treasure. But you notice the patterns that are around there that we look at all the time. The thing that I wanted to bring to your attention is the fact that within those patterns is how the number sequences actually work. And if you look at this, this is how numbers, how Fibonacci did his thing, folks. This was what really got us to where we are to these days. You'll notice that the number 1 has 1 angle, the number 2 has 2 angles, the number 3, number 4, 5, etc., etc., etc. And when you're working with Fibonacci numbers, there's so many Fibonacci numbers. If you start, extrapolating, you can come up with about 15 or 16 different numbers going from 0 to 1, or going even higher out if you're expanding. But what we're trying to do is we're just picking 2 numbers on the contraction side, which are 0.618 and 78%. And on the expansion side, we're looking at 1.27 and 1.618. And what we're trying to do is to match up the angles that we're looking at with the ratios in the pattern, and that's what forms the patterns, and that's where you get the 3-drive pattern. When you get to the 3-drive pattern, you have 3 ratios that you're looking at, plus an ABCD pattern. That's why it's such a powerful one. Same thing with the butterfly. Same thing with the Gartley. Now, the ABCD pattern only has 2 angles, so it's a little less powerful, but still powerful. So that's what I really try to do when I'm doing this. And when I'm doing the predictions for the next day, all I'm doing is I'm going out and looking to see where we are as, some of these, different things that we're looking at as where I think the highs and lows are going to be. So that's really, what I'm really trying to look at. So whether that's going to be the case or not, I have to wait and see, if that's going to happen. And if it does, I'm a happy camper. And if it doesn't, I'm not a happy camper. Today, I'm a happy camper because things are working the way I'd hoped. Now, we just got a post from our good friend Terry that the Bitcoin is up 12%. Folks, we talked a lot about this here in the Bitcoin. The target that we were looking at was 3,800. There were some times, well, I think it is, Terry, but that's just my opinion. That ABCD that you're looking over there on the far right there, that's the big ABC going way, way back there, back in January. That's that one we were watching. Now, in the history of Bitcoin, going back to 2010, it has had, this is the fourth. This is hard to believe if you believe in statistics at all. Using an algorithmic chart, there's been 83% corrections in Bitcoin. And that's when it went from 500 back to 100 and stuff like that. I mean, really wild stuff. So that's, oh, we got a caller on the line. May I help you, sir, or ma'am?
Good morning, John.
Oh, it's Mr. Z. I see the Z there. He didn't put Z. He didn't put the Mr. They didn't put the salutation in. What's up, buddy?
I wanted to ask you if you could help, please. You had mentioned yesterday and repeated today that Wednesday the 28th is,
yes,
I call it an anti-P index date. In other words,
zero P. Zero P.
Right. My question is, can you assist and share with us what markets you're focusing on in regard to this particular date and that lack of aspects showing up?
Well, I'm actually looking at everything, Z, because this thing is so, unusual that I have to watch everything. Now, I really wanted to be a seller around 2,700 in the S&P. We only got up to 2698, and I see we've already dropped about 7 points from that level. So I'll have to wait and see, if I get some type of a counter trend rally here to put a low risk short on, because right now we're an amateur hour, and I hate to do anything in that first 45 minutes, because after that, it sort of thins out, and you have some better ideas of what the market's going to be doing. But right now, if I had my choice, I'd like to be a seller of the S&P up around 2695, and but I certainly wouldn't want to be short if it gets above 2700, because that was a major bottom down there in that E-mini with that 3-drive pattern and all the other things that were happening. Now, maybe that's all we get. I don't believe that's it, because we've got so many news items that could be positive, and most of the people don't think that anything could happen with China, and that's usually when it does. And Z, this is the most amazing thing to me. I mean, we should be at war with Russia. I mean, after what they did, I mean, they actually went in and stole 3 ships out of a foreign country. I mean, and that's nothing compared to having, well, I know somebody lost its life, but compared to a journalist in Saudi Arabia, there's nothing there. I mean, I don't understand the relationship there. These markets are just, they don't even care about it. So that means they're bullish, in my opinion. I better stop talking.
Yes. No, continue away. Thank you on that. We've listened to you speak many times over past years about the transit charts and aspects and your P index regiments. I've never heard you speak of that subject in regard to other markets outside of stock markets. Do you apply that technique to other markets like the currency, bond, or precious metals markets?
Of course, because I do the same thing with every market. See, you and I trade quite a bit alike. So when I'm looking at ABCD patterns in the grains, I'm looking at ABCD patterns in bonds and everything else. And that's really what I'm doing. I keep it as simple as possible. I believe that the structure of the market is really where the theory lies, and so that's what I'm really focusing on. I mean, the hardest part that I have, and as you know this as well as I do, is trying to take that fog of fundamentals that you hear all night long, on Bloomberg and all the other places, that it makes you makes you a little dizzy. So if you can get past that and just look at the numbers, you have a pretty good you have a pretty good feel for it. We have something like what happened in natural gas over the weekend with that young man up, well, he wasn't that young, up in Saskatchewan with being short natural gas with all that bullish news coming out, and then yet the market just goes, straight down the other way. So it really makes you really respect the technicals more than the fundamental news that you usually hear.
Thanks very much on that. So let me ask you very directly here about gold. And I'm tracking, since we're right on the cusp of rolling from D's to Feb as the lead COMEX contract, I'm set up the patterns and the Fibonacci calculations on both D's and Feb. The D's is 1211, the Febs are out at 1217. So here's my question. No aspects, no transit chart aspects showing up today, the 28th, and
yes.
East Gold having made a low at 1211, Fed Gold at 1217. As we both know, that's within a point of a Fib 618 support mark versus the low that came back. Let me make sure I get this date correct. November 13th. That was low on East Gold down 1197. My question.
Z, stay with us. We got to pay a few bills. Come back with us, okay? 3 minutes.
Very good.
Mr. Z, coming back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're back, folks. We're talking with Mr. Z from the TFNN Den. John, we're talking about the gold, that fib number in the Christmas gold coming in at around 1210. Is that correct?
Yes, and on this this date, November 28th, with 0 aspects, which you suggest is important to you, is this a candidate for a tradable low right here?
Absolutely, at 1210, another $1.50 lower. You have to take out. We took out yesterday's low by $0.50 already. We're still trading at 1211.50, so I think we can easily make 1210. But at that point, John, I don't think you need a $5 stop. I think it's either going to stop right at 1210, or you're going to be, you'll be out, because I don't think it needs a $5 stop there. It's got to stop right there if it's any good at all.
All we need now is your friend from the past with his deck of pork belly orders to have the same deck with a buy of 2,000 or 20,000 COMEX D's gold. That's what we'd like.
That's one of my favorite stories from the Merc. I'll tell you, I was so scared that day, John. I thought for sure I was going to get 500 or $1,000, or even be banned for trading for a month. Sometimes that happened to people that did some stuff. One of the worst things that you could do on the floor was to show money. In other words, if you reached in your pocket and had some bills or something, boy, that was an automatic fine of $250. And they had tapes, and that was. Yeah, I'm sure you remember that, but boy, I was very, very careful about that. They warned me about that at my orientation meeting, but no cash ever was shown on the floors for sure.
Yes, back in the late 80s, I had a friend, a buddy, who was a floor trader in the World Trade Center building in Manhattan, and he described to me the very same rules and regulations, so very cool.
Hey, thanks for joining, my friend. I really appreciate it, and the happiest holidays to you, my friend.
Thank you very much. Bye now.
Bye-bye.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!